Welcome in officially, y'all, to this workshop on how do you get ready for buying or building a house as an entrepreneur. Really excited about this topic today because I have gone through this myself over the last couple of years and hit a pretty firm brick wall as I started this process. Realized even though I am competent with finances, I better be if I'm doing this. Even though we were really careful in how we were tracking things, I didn't have all of the financial documentation ready, and I didn't know what I didn't know in leading into this process. And so I found a bunch of mistakes that I had made in preparing to build our house, and nobody had taught me what I needed to know in order to be able to qualify for it. So we're going to get into some advice today that you're probably not hearing anywhere else. But first, let's bring up the slides officially if they'll let me. Ooh, maybe they won't let me today. That's fun. Let's see. iPad. Please connect. There we go. All right. We're going to see if it'll let us go to iPad only. Boom. Okay. So let's go. Let's not start in the middle of the presentation. How about that? Beautiful. All right. Welcome in. Here we are. It's official. So how to buy or build a house as an entrepreneur. Here's the financial guide to you buying or building your dream home. And we're going to get into everything that you need to know about actually qualifying for the mortgage or construction loan if you're a business owner, so that you can buy or build the dream home. This is our house that we built over the last 2.5 years. It was a longer process than I anticipated. And I'll tell you, as we were contemplating building a house, it was the one thing I had promised to myself that I would not do. It was like, it just seems like it's going to take way too much time. It seems like it's just a lot of hassle. You always hear how rough it is on marriages. And I thought, no, that's the one thing I will not do, until my wife and I decided, no, we really want one house that we want to stay in for the rest of our life. And so we're going to dive in, and started finding that, there's a lot I didn't know about this process. And the reason is because nobody else is talking about this. What do I mean by that? Well, your business coach is not talking to you about how to qualify for the mortgage with what you're doing. Your bookkeeper is not talking about it. And I can guarantee you, your tax advisor, whoever's filing your taxes for you, is not looking at this. So the question is why, and how do I know what to do in order to get things ready? Well, here's the thing. Most of the advice that you're getting financially is aimed at you spending less on taxes, investing in the business for fast business growth, and or maybe just like thinking only about planning for retirement. And the reason that all of this is going to be so contrary to what you've heard is very few people know what it takes to get a mortgage as an entrepreneur. In fact, a lot of the banks are just not used to working with entrepreneurs. It's not their bread and butter. So they're not putting out resources on here's what to look at as a business owner. So how do I know all this stuff? Well, we've gone through it. And about 6 months ago, we moved into our dream home as we had built it from scratch, literally designed the entire thing. In fact, as I look back at my last journal entries years ago around what I wanted for our life, one of the big things was, how do I want to create an environment that fosters the kind of growth and development I want for our kids and for my work experience day to day. And it was so interesting looking back. I had one specific day, this is like 5 years ago, where I was like, this is what I really want in my future. And I detailed some very specific things about how I wanted my environment and my house to be set up. I wanted this number of bedrooms. I wanted an office that was separated by the rest of the house with at least 2 doors. We wanted our basement apartment so that someday, if we needed to, we could have our family live in there, whether parents or kids. We wanted, a great playroom and homeschool room because we homeschool. We had all these specific things that we wanted, and we just realized that we couldn't get them by buying the house. So we literally designed it from scratch. And I'll tell you, it was a very interesting experience figuring out something that I wanted and then literally imagining it into existence, much like you do in your business. Such a cool experience. But along the way, I had to jump through literally every financial hoop possible to make it happen. Plus, we've worked with hundreds of business owners at this point on their finances and getting both the personal and business finances dialed in. And so, again, this is something near and dear to our hearts. And if you stay to the end, I'm going to show you how you can get our brand new home buying and building calculator for entrepreneurs. It's nearly done, and it is so cool. It tells you exactly how much you would qualify for based on your actual financial numbers, based on your state, based on mortgage interest rates, based on property taxes for your state, based on insurance costs for your state, like super specific to you. How much can you buy and adjusting the numbers to see, well, what do I need to make in order to get the level of house that I want? Because if you plan this thing right, you can totally make it work. Okay. So who are we? We are CEO Finance Academy. We're a whole bunch of business owners who realized that just making money didn't mean keeping money. And as we got really good at helping other people make money, Will, my co-founder, and I both actually had a marketing agency in our early days. We got really good at helping people generate sales and revenue. But we realized that business owners didn't know how to keep it. And so CEO Finance Academy was born, and our mission is to create consistent financial abundance for business owners, their families, and their employees. So let's talk about how we want to, how we go about this. We work in sort of three specific areas. Number one, one-on-one mentorship with the business owners we work with. Number two, financial education so that you can understand what's actually going on in your finances. And number three, building simple financial systems so you can have repeatability in your profitability. So let's talk about the three shifts that you need to make in preparing for buying or building your dream home. Shift number one is that business profit is more important than paying less in taxes. What do I mean by that? Most of the business finance advice that you get out there looks at how do you make profit and then make sure that you're not paying any more than you need to in taxes, which I happen to agree with, except for the 2 years before buying a house. So for example, I started listening to really smart people on taxes, tax entity structures that make the most sense for paying as little as possible in tax, looking at all the expenses that you could legally and ethically write off through a business so that you would pay as little in tax as possible. And then I started looking at, hey, we want to build this house. What's the bank going to qualify us for? And I started realizing those two things are completely at odds. Why? Well, the bank cares about a couple of specific things that your tax advisor probably doesn't. In fact, it's the opposite. So banks are going to look at three major things as you're going there to get a loan. They're going to look at the last 2 years of profit from your business. How do they assess that? They're looking at tax forms for the last 2 years and P&Ls. And so if you're going to get a mortgage and they say, hey, we want your tax bill for last year, but you haven't filed taxes yet, you're going to want to get on that. Number two, they're going to look at your personal debt. So they'll pull your credit report. Number three, they're going to look at cash flow. And I don't just mean business cash flow. I mean, how is the cash flowing between the business and you personally? Because let's imagine for a moment that a bank is about to loan you $1 million to buy a new house, and they look at your business and it's profitable, but you're not paying yourself at all. The business is not the one repaying them. You are the one repaying them, and they're looking at how risky you are. So of course they're going to care about, is the business actually paying you? And we can, you can almost fake that on paper from a profit and loss statement and show, I've got all this profit. But if the money isn't actually moving from the business account to your personal account, the profit doesn't do you any good. So we have to show them consistency in you paying yourself. That's why the way that we've designed CEO Finance Academy and the stuff that we do every single month is designed around this. How do we make sure that we can show consistency, and not just for the bank's sake, but for your family's sake, but the bank cares about it too. So that's shift number one. Shift number two is to reverse engineer what you want. This is where the math side of things comes in. So brace yourself for just a minute as we look at the math. How do we do this? Well, we start at the end. So if you think about GPS and you plug in, your destination, it's going to look at where you're at and where you want to be. And then it's going to say, well, here's the best path. As we're figuring out where do you want to end up financially, we need to start with, well, how much house do you want? And if you haven't read the book, 2X is easier than 10X, I would highly recommend it. It's a great read. I'm finishing it right now. It's by a guy named Darren Hardy, along with another coach. But one of the things that I love in there is he says you need to give yourself permission to want things and be okay with wanting as a business owner and not just doing things because you need them. And so many times we say, I don't really need that. I'm okay being in the little, our last house was a 3-bedroom, 1,500, 1,600 square foot house that accommodated our little tiny family at the time. But then I started a business and I didn't have an office, and our family was growing. We didn't have enough bedrooms, and we didn't have any storage space, no basement. It was like, well, Does this satisfy our needs? Yes, it does. But what if I looked at it, my life, instead of what do I just need to get by? What do I actually want? And being okay letting yourself dream and think about what you want, and then saying, well, how do I just build the life and the business that gets me what I want? And so that's what we started doing. So, well, what's the house that we actually want? Is 3 bedrooms enough? No. We've got 3 kids. So we want to have everyone have their own bedroom. We want to have a great big homeschool room. I wanted to have a completely separate office. And so we said, well, we're going to want at least 5,000. It turned into 6,000 plus square feet. Do I need that? No, but I want it. So be okay with wanting something and working towards that thing. So now we have to figure out, how much house do I want in terms of square footage, right? How many bedrooms do I want? How many bathrooms do I want? What kind of space do I want for my kids, for my family, for myself? If you're a car person, cool. What kind of car space do I want? What kind of yard do I want? And then we were able to go start looking for places that could accommodate that level of life that we wanted. We wanted to live in nature. So we live up the canyon about 3 miles from civilization. It's gorgeous. It's so pretty out here. I wish I could show you the fall colors outside right now. So pretty. We absolutely love it here. It's by a little lake. We've got these hiking trails all over us, mountain biking right outside our door. It's beautiful. It's what we wanted. But I didn't get it because I said, well, what do I need to just get by? But I also didn't get it by falling into it and say, well, didn't realize that I'd end up here. No, we reverse engineered everything from this. So first, how much house do you want? Put specific features to it, then put a specific dollar amount to it. Go look at your local MLS listings online and see, hey, what are houses going for? The kind of house you want, what does it go for? If you're going to build a house, start talking to builders. Hey, what does a house like this cost to build? And then get that number firm. Once you have that, now we have to figure out the debt side of your life. Cool. What kind of debt do I have? So if I were doing this, I would literally be sitting here and saying, all right, I know that I've got this debt. How much can, here, let's zoom this down a little bit so you can see right there. Sweet. How much do I have and what do I spend each month? So I might put in here, I've got a credit card, and my monthly payment on that credit card is a minimum of $500. Maybe I've got student loans, and maybe my loans are kicking in this month, and those are going to be $1,500. And maybe I have a car loan that's, I don't know, $300 a month. Great, you're going to take those numbers, you're going to tally them up. Here's $2,000, $2,300, sweet. So we've got $2,300 of monthly personal liabilities. That's a really important number to know. We'll see why in just a minute. Cool. By the way, our calculator will help you do all this stuff. So now you figure out how much income you need to show each month. Why? Because the bank really cares about what we call debt to income ratio, or you'll hear it called DTI for short. DTI is basically how much are you making every month and how much are you spending every month. So it's monthly debt divided by monthly income. So you better know those two numbers because the bank is going to know them. And it's so funny to me. Everyone talks about like, oh, I'm going to see, how much the bank will qualify me for. It's math. They're literally just using math. This is one of the math equations they'll use, debt to income ratio. We'll look at averages here in just a minute. But if you know this number, you can have a really good guesstimate of how much the bank would qualify you for, therefore how much house you can get, okay? So now let's talk about your income sources and where they'll pull income from. If you have a W-2 salary, we're going to talk about this. I got to star this one. If you've got a W-2 salary, yes, they'll look at that. If your spouse has a W-2 salary, they'll include that if you guys are on the loan together. They'll look at business profit, and they'll count that as income. They'll look at any other taxable income as well. So 1099 income. They'll look at, if you've got rental properties, they can include rental property income. Kind of depends on the situation. Usually they'll only allow somewhere around 75% of your rental income to be counted as usable income for debt to income ratio. But here's the big one that everyone gets wrong. They think, I have to have a W-2 salary so I look legit to the bank. Have y'all heard that before? It's like, I got to go get myself a W-2 salary so I get qualified. Guess what? They're going to ask, where do you work? And then they're going to look at your tax returns and say, oh, you work at your business. You are a business owner. And all of a sudden, W-2 salary stops mattering in the context of stability because now they're just going to count you as a business owner, right? The sad thing about business ownership, the tough part from a banking standpoint, is that the bank will look at your employees And they'll say, oh, you work for ABC company and you have this W-2 salary. Great. I'm sure you're locked in as long as you got 2 years of employment history there. Great. We'll allow that. But they'll look at you as the business owner and say, yeah, 5 years in business. We don't care. You're still a business owner. There's relatively more risk. And we're going to assess the entire business, period. And the thing is, they're not only going to look at your last years of tax returns like we talked about to base your average monthly income, which I didn't mention this to you, but when they're looking at monthly income down here, they're going to do this calculation. This is so important because you have to have 2 great looking years of taxes. Okay. So how they do it, they're going to take, let's call it right now, it's 2023 when we're recording this. So they're going to look at 2021 income plus 2022's income. They're going to add those together and divide it by 2 to find the average. Okay. So, oh, that's really hard to see red on green. Jeez. That hurts the eyes. We're taking that off. So let's imagine that you had a killer 2022, but you were just getting things going, or maybe you had a break-even 2021. It's not going to look so good. It's going to drag down that average. And you might say, well, yeah, but this year I'm killing it. Yeah, but you haven't filed taxes for it yet, so it's not set in stone. Because they know it's relatively easy to pull a P&L out of the air and say, this is my profit and loss statement, guys. And it's like, well, what does that actually mean, right? Tax returns, on the other hand, is a legally binding document that you're submitting to the government saying, this is what I have actually made, right? So they put a lot more weight on actual tax returns. So this is really important. If you say, ooh, I recognize that I need, I don't know, maybe it's $200K of household income to qualify for this house. Well, that's $200K average over the last 2 years that you need. This is why it is so important to start now. If you're planning on buying or building a house in the next 2 or 3 years, get the finances looking good right now. If you wait until 6 months before you go to the bank, it might be too late. And they're going to tell you, hey, sorry, you don't have enough income. Okay. So W-2 salary, does it help? Yes. Is it what's going to make you seem stable? No. If you're an S-Corp owner and you're taking a W-2 salary, they're still going to look at the business and they're going to consider business profit right along with W-2 salary. And not only will they look at last year's tax returns, they will look at this year's profit and loss statement year to date to see how things are going, and the last probably 3 to even 6 months of business bank statements. They want to see actual numbers coming in, and a human will be pouring through those. Okay. You cannot fake this stuff. In other words, it has to be legitimate profit, legitimate cash flow, legitimate business success, ideally sustained over at least 2 years. Cool? So, target debt to income ratio. For a lot of banks, and this is not what I'm saying you can afford. This is what the bank will look at you and say, how much are we going to lend you as a maximum? They will put a target of somewhere between maybe 38 on the low side. I have rarely seen above 45. Target debt to income ratio. In other words, if I had 4,000, let's do it like this. Let's say I have 2,000 of debt payments each month, right? If my pencil works. 2K of debt divided by 10K of average household income, right? So here's our debt. Here's our income. That would be a current 20% debt to income ratio, right? 2 divided by 10. And let's say the bank will allow me to go up to 40%. Then they're going to say, well, we'll let you have a combined house payment, which usually includes things like taxes and homeowners insurance, plus the principal and interest portion of your home payment. They'll say, okay, well, we'll let you have, you've got an extra 20% open here. Because if you're using 20% right now, we'll let you go up to 40%. Then that means that we'll let you have a total home payment per month of 2K. Okay. So now they say, all right, well, if we'll let you have a total home payment each month of 2K, how big of a house or loan will we qualify you for? And then they do all the math. And guess what? If you've got my spreadsheet, it'll do the math for you to say this is how much house you can afford based on that principal and interest and assumed estimated property taxes, etc. That's how they're qualifying you. So you might want to know these numbers ahead of time, and you might want to be able to control these numbers to make sure that your debt gets paid down while your income goes up. And the great thing is, as an entrepreneur, you are in full control of that. And that's where we get into step 3. How much does my business need to sell in order for me to make what I want? truly reverse engineering rather than just saying, I need to make $5,000 more dollars per month than I'm making right now. Let's set a specific number and say, cool, I want 15K per month take home. Great. Then how much does your business need to sell? We need to take profit margins into account. We need to take your overhead into account. We need to take your business debt into account, right? All those things need to line up for us to say, this is how much I'm actually taking. This is actually one of the end things that sort of one of the mile markers we get to in CEO Finance Academy when we work with people. We can reverse engineer this to the dollar based on your business specifically. I made this really cool calculator that does this very advanced math to say, here's your true target from a sales standpoint, taking all these different factors into account. And now I have a North Star to aim at in my business. So let's say, for example, if I know I need to bring home 15,000, and let's say my business target revenue that I need to sell is, I need to sell 120,000 per month, but I'm at 75 right now. Great. Then the next step is, what is the path to get from where I'm at 75K in sales up to 120 in sales? Who do I need to hire? What profitability needs to change? How do I scale this thing? And that's ultimately what we're masters of is, hey, let's go figure out how to do this thing profitably. Let's get a handle on the numbers, a handle on the finances, and set up a system so that you can actually get there and ensure that it's profitable. Because one thing that we see over and over is people say, all right, I'm going to double the business. And they expect double the income or double the profit. And they start finding that, nope, it doesn't work that way. And so instead, we get a real handle on your numbers from the get-go. Whether or not you work with us, you need to know what my numbers are looking like so that as you're growing, you can say, hey, is this making the change that I want to or not? So then we need to start now. So how do we start now? Well, we actually take action on this stuff and we look at our finances. So if you want that house in the next 2 years, here's what you need to do. Number one, get more profitable. If you're not profitable right now, then get profitable. If you already are, get more profitable. I would really encourage you to look at what your net profit is as a percentage. Like, what's your profit margin net? We see a lot of business owners in the 3 to 5, 6, 7, or 8% range. And I'll just tell you, for most businesses, unless you get really big, those margins won't cut it. So we need to improve our profitability to 15 to 20+%. And you can completely do it. I guarantee you that there's a business in your industry that is probably doing double the profit margins you are right now. Now, if you're doing really well, sweet. I'm so excited for you. I hope that's the case. But it can happen. And so it's through wise financial stewardship that we make this stuff happen. But number one, get more profitable. Number two, get your crap together. Get your financial documents together. So what financial documents do I need? I need a clean P&L, which means I probably need to hire a bookkeeper if I don't have one. Because if you're not a bookkeeper yourself and you're doing your own books and you're doing more than probably 10K a month in revenue, you should hire a bookkeeper, have them get things cleaned up, okay? This is the biggest downfall of business owners trying to go get loans is their P&Ls look like crap. Second piece is you want your balance sheet to be accurate. If you have a bunch of assets in the business, maybe you've purchased a bunch of vehicles or equipment, make sure it's on there. I see so many business owners that just forgot to tell their bookkeeper that they bought a new truck or that they had $100,000 of equipment or inventory sitting there that wasn't on the balance sheet. We want to show that so we can show, hey, I have assets. I'm responsible. I have created assets. Okay. Number three, pay yourself so that we can show every month, yes, I am transferring money. The way we like to do it, every month you should be getting a W-2 salary if you're an S Corp. If you're not yet an S Corp, then we're getting monthly owner's distributions or owner's draws. If you're an S Corp owner, I still like to get an extra hit every month from the business as an owner's distribution. And then every quarter, we're taking quarterly owner's bonuses. And if you're not consistent like that at that level yet, hey, maybe we should talk. But then the third piece to this is you need to start building up reserves, because this is the last piece that the bank will look at. They will require you to have a certain number of months in reserves. Each bank is a little bit different and it depends on the kind of loan. But for many banks, if you're getting a construction loan, for example, they want to see 3 to 6 or even up to 12 months of reserves. Meaning if your new mortgage is going to be $5,000 a month, they want to see 6 months of that or 30 grand sitting in the bank before they'll let you buy the house or build the house, in addition to your down payment, right? So they want reserves. Also, those reserves need to be what we call seasoned. They need to be sitting in that bank account for a long enough period of time, because what they don't want is you getting a free loan from your parents and calling that your down payment or your reserves. They need to see where it came from. So if we can let it sit there, if you've got a bunch of money in the business, but you know that you're going to be building a house or buying a house soon, you need to show reserves, it might make sense for you to make that transfer over into your personal account so that we've got the money sitting there and seasoned for, usually it's 3 to 6 months at least. And then the bank just doesn't question it, because they only see the last maybe 3 months of bank statements, right? And they just see that money in there. But there's this balance between business reserves and personal reserves. We call it the priorities scale here. And on this side is the business, on this side is personal. And you just have to decide, what is my focus right now with where I'm building reserves? In the business side, do I need to put more into, let's call it the debt side, or the reserves side? Right? Do I need to pay down debt? Do I need to pay down reserves? Which is more important? Same thing in the personal side, debt or reserves, or we'll call them savings over here. And so as we're working with business owners deciding where do we keep the cash, we have to decide what's our priority. Do we tip the scales heavier onto the personal side? And if so, are we trying to pay down debt or savings? Or is it on the business side, debt or reserves? And we're making decisions every month with our business owners as we're sitting down one-on-one with them. Hey, how much are we going to move over to you personally this month to make sure that you've got what you need while the business still retains what it needs? Cool. So get those things in order. And if you want help with that, getting your business finances dialed in, let's talk. This is exactly what we do all day, every day. In fact, we set aside time on our team's calendar every day to talk with business owners who are just like you, thinking, I might not be as on top of my finances as I would like, and I would really like to get them more dialed in. And I recognize that it is as important, if not more so, to me to get those dialed in as it is making more sales. We all focus on marketing and sales and your delivery and HR and admin, and for some reason we don't learn finances as entrepreneurs, thinking that we can just either kick the can down the road and just making more sales will solve it all, or we expect that because we've hired a CPA or a bookkeeper, they're going to do all the thinking for us, when that's not the case. And so we've set aside time on our team's calendar specifically for you who are on this call right now. And if you want that, what we'll do is we'll drop the link here in Zoom. If you're here live, if you're watching on the replay, we'll have the link below. It's a 15-minute call where we'll get clarity on 3 things. Number 1, what is the biggest focus in your finances right now? Number 2, what is the best next step to hit your target? And then number 3, we'll give you this brand new home buying and building calculator that I've poured so much time and effort into, and it can give you a really good sense of, hey, how are you doing financially right now with respect to getting a mortgage? It's something that at some point, I showed it to a client yesterday. He actually used to be a mortgage broker, and he said, this is incredible. You need to license this out to mortgage brokers. He said they would eat this up as a tool for helping their people. I thought, sweet, thanks. So we're going to give it away to you for free for being on here. Cool? By the way, this is a call where we're not selling you on anything in this call. We have nothing to sell you. It's 15 minutes. Let's get clarity on these things. If we feel like, you know what, you actually might be a fit for us to work together, then we'll have a follow-up call and we'll look at that together in depth. This is so important for my family because I'll just tell you, I got this stuff wrong. And for example, I didn't have a good enough handle on how taxes truly worked as I got all the complex S-Corp, holding company, multiple entity stuff set up. And when we first went to the bank, they said, yeah, this is great. You're looking good. Let's put you through the system and we'll get you approved so you can start building right away. We got ghosted for almost 2 months. I was like, what is going on? Please tell me. And finally they came back and they said, you are making so much less money this year than you were last year. What's happening? And I said, what are you talking about? I'm making more money. They said, no, look at your tax returns. And I looked closer at my tax returns and I realized I had missed something incredibly crucial. I didn't understand how the bookkeeping should have worked between my multiple entities. And so we had double reported income on my tax return from a few years ago. I didn't catch it. I knew that I knew that something was off and I had pressured my CPA. I was like, something's off, something's off. He's like, no, this is right. And we ended up overpaying on taxes by $23,000 that year. Luckily, I was able to file an amended return and get that all back, but it torpedoed our process with that bank. In hindsight, Huge blessing because they were a 2-time close loan, meaning that, we would have gotten an initial construction loan and then had to reapply for the final loan. And guess what? If we would have reapplied for the final loan, the interest rate had doubled. We probably wouldn't have been able to get the house. So I'm so glad that happened to me. But also, if I would have known better, my finances, the documentation would have looked cleaner from the get-go. And I'll just tell you, I sent more financial documents to that bank than I knew existed on planet Earth. And so now the second time when I went and we sort of had to have a hard reset for a couple months to say, okay, let's get the taxes back cleaned up. And then I literally called every financial lending institution in my state that offered construction loans. And I asked them a few key questions, which you should be asking. Number 1, what are your interest rates? Number 2, what are your closing costs? Number 3, what debt to income ratio is your top max? And number 4, what options do you have at 20% down payment, at 10%, and anything under 10% down payment? So I got a really good sense of what they all offered. I found the bank that was most willing to answer those questions. I actually applied with 2 separate banks. We went down the road with both of them, found that one had much better rates, was willing to lock in a rate then, which thank goodness we did because then it skyrocketed by almost double. And then we finally got approved. It was a grueling process. I would never want to go through it again, but I'm so glad I went through it once and only once, and now know how to take care of the finances in such a different way. So I would love to know from this, what was your takeaway out of this? What do you feel like you need to go do next in your finances? If you're here live, will you just put it in the chat as we wrap up? What is the next thing you feel like you need to go do in your business to progress towards buying or building the house that you want? I would love to know what was like the big takeaway from this, and then go do it. Cool. For those of you who are on the recording, thank you for being here. Those of you who are on here live, I'll stay on for a couple more minutes and answer any questions if you've got them. Otherwise, book a call with our team below, and we'll look forward to talking with you. Cool. Thanks for being here, and y'all will see you on the next workshop.